Folks, welcome to the Contrarian Trader. This is Robert Desmond. It is New Year's Eve, December the 31st, 2011. My last recording for 2011. What a wild year. Let's begin with a chart of the Dow Jones Industrial Average, a full year's chart, daily basis. If you were net long of the Dow Jones Industrials alone, and I do mean alone, because the other indexes were down, you would have been up a total of 5 points on the year. Now, remember that 75% of all fund managers are unable to beat the S&P 500. That means that most fund managers are down on the year. Now, what are you paying these guys for? You're paying, if you're in a mutual fund, you are paying 12B-1 fees, which is an advertising fee. You're already a customer, but they're charging you 1-2%. You're paying a management fee, yet they're unable to beat the S&P 500. Why wouldn't you just be long of the Dow Jones Industrials? Or the S&P 500, at least you have reduced fees. So in all reality, if you were net long of the Dow Jones Industrial Average in 2011, you would have a gross profit of 5%. Less inflation, 2.5%, 3%. Less expenses, another point and a half. At best, you are flat on the year if you were net long of the Dow Jones Industrials alone. S&P 500 and Russell 2000, let's not even talk about that. You'd be well down. How did we do in 2011? We're up 67%. How did we do that? Well, we used volatility to our advantage. Take a look, for 5% gross. Look at all of the volatility that you had to endure to earn 5% before taxes, before expenses. This is nuts. So how did we do it? How did we not just beat the S&P 500, but destroy it? How did we do it? You can look at all my videos on the blog and all the stocks that I profile on the blog. I don't trade, but a lot of my members do. But some of the stocks that we did trade, TZA. I was buying up TZA throughout this time period. This is our biggest gain of the year. We're up over 100% on the TZA. We use a trailing stop loss order. We got out right near the top. I can't say that happens all the time, but you know what? When it does, I'm going to brag about it. So we got out. We got a really good here. We did it again. Added more back here. It rallied. That's 2 out of probably 5 times, but these are our 2 top performing periods using the TZA. This requires that you absorb some volatility, but even if you were risk adverse, you could have just bought the IWM. You wouldn't have had the return that we did using the TZA, which is a 3 times, it's a leveraged ETF, but you would have still profited and made a lot of money. TNA. Well, if we didn't want to be long of the TZA, which means you're short of the Russell 2000, well, then perhaps it's time to get long, and that's what we did of the TNA. That's 3 times the move. CME. CME, we knew was going to be a victim of what they did to their customers by freezing after the MF global collapse. CME was just getting annihilated. Counter trend rally. I watched it, rallied right into its 50-day moving average, which was declining. Figured there was not going to be any support there, and we shorted right into this candlestick here and enjoyed a nice ride down. We took profits. Apple. Everybody was saying, Apple's going to 700, 600, it's going higher. I was telling my members, look at the videos on the blog. I profiled it back then. Get short of Apple. Why? It's because on a weekly chart, the RSI was not confirming the move higher on Apple. Plus the fact that you had Mr. Steve Jobs, God rest his soul, died, the visionary. So the catalysts were in place for us to get short of Apple. And that's what we did. We shorted it twice, as a matter of fact. This is another big winner on the year. First Solar, this poor thing got crushed. We got long. We were watching the weekly charts on First Solar. I didn't mention it on the blog, but we were watching the weekly charts looking for long-term support, long-term resistance. We found it. We got long here. We sat with a small loss for about a week. Boom, rallied higher. Because we look at the macro picture. You can't just look at the daily charts. You need to watch the weekly charts, the monthly charts if there's no data to provide you historical support on these stocks so that you know when the risk to reward is in your favor. They don't tell you that on CNBC. All they do is tell you buy. Rarely to short, only buy. And look at the returns you would have received. Think about these guys that come on TV every single day. $2,000, $3,000 suits, houses in the Hamptons, and this is your return for the year. 5% gross before taxes, before expenses. Give me a break. It's a joke. Absolute joke what they get away with. Small cap stock, PFSW. This was just a couple of weeks ago. We made 14% on this stock within 2 days. We took our profits and we got out. Things still kept rallying. I actually have a member that's still long in this thing. He sends me emails. What should I sell? Use your trailing stop loss or enjoy your trend line. If it breaks below it, get out. Or use a trailing stop. If it tops out, which is looking a little bit toppy here, Michael, if you're watching, you're getting some topping tails here. You're right at resistance. You may want to consider putting in, tighten up that trailing stop. Look at this doji formation. You could get a spike higher. Wouldn't be a bit surprised. You got good support here at $3.20. You get a breakdown below. If you're not going to use that trailing stop, Mike, get out. If you're going to use that trailing stop, fine. Look to get out at the 50-day moving average, which is in a steady decline. That's going to be your natural resistance level if you get past this initial resistance level here. So look to get out at the 50-day moving average or a breakdown below 320. Let's move on. Netflix. We traded this one. We made a day trade on it. It just defied logic. This stock just wanted to go lower. But this is one that we're adding back to our watch list. And members, I'll be sending out video with regard to, I already touched upon First Solar. We're going to want to look to get long of First Solar. We're going to want to look to get long of Netflix now. It's reached our price target. Go back to my price targets. I kept reducing the price targets. I think that there is further downside here on Netflix. I want to get long of Netflix back in the 60s. So go back, check those videos on Netflix. Nothing's changed. Contrarian trading is the best route to take. If you are a value investor, if you like to buy stocks cheap, this service is for you. If you are a short seller and want to look for those indicators that tell you when it's proper to get short, like back here with Apple. Let's go back here. We knew back here that this was unsustainable. This is all short squeeze right here. This was unsustainable. And when you add into the fact that Steve Jobs had passed away, when you add into it that you had declining up volume, you had no volume to support this move higher on Apple. On the weekly charts, when you have your RSI failing to confirm the price movement, that's an indicator that there's weakness in the stock, even though the stock is going higher. How is that? Because it's all short covering. They're being squeezed. And then we want to look to get short, and that's what we did. So please, folks, I beg of you, take advantage of the 14-day free trial offer. If you don't like it, cancel. Contrarian trading is the best way to beat the averages. When volatility is high, we day trade. When volatility is low, we swing trade. But we are always looking to take advantage of what the market doesn't want you to know. What Wall Street doesn't want you to know is that there are times when stocks are at extreme overbought levels where they need to get shorted. And when they're at extreme oversold levels where they need to get bought. SHLD is now on our screen. Let's pop it up. Here, SHLD. I already went through this with members in the members version of the week ahead commentary. Now, take a look at this. You have an S&P 500 stock that is at extreme oversold levels The candlestick here is telling me that it wants to go lower. Volume to the downside rose on Friday, which speaks volumes, pardon the pun, especially due to the fact it was a holiday Eve. It was a Friday without you had the New Year's Eve holiday. So volume was light across the board. But so when you see down volume rise, you need to take notice of it and expect to see lower levels. So I do expect to see lower levels. I've already sent out a communication to members of when we want to get long of SHLD, what our plan is, where support is, and then we're going to execute it. That's probably going to happen this week. If it doesn't happen this week, it's not going to happen. So, folks, if you want to watch that video, please sign up for the 14-day free trial offer. I'll get it out to you. If you have any questions, shoot me an email. Have a great, safe New Year's Eve, folks. And I look forward to trading with you and speaking with you in 2012. Bye-bye.